IMF projects favorable economic growth for Benin Republic. And Uganda launches second round of competitive bidding for oil blocks. Plus, Egypt's headline inflation drops to 13% in April from 14.2% in March. Thank you for joining us on Business Incorporated. I'm Chimeze Obi Iwago. We get started with the markets, and here in Africa, the major stock markets we track here were all in the red zone at intraday, led by the JSE index in South Africa. The index was down 1.07% a day after the country's election, with Steinhoff the biggest loser after the retailer reported a $4 billion operating loss in the 2017 fiscal year on Tuesday. In Nigeria, the NSE index was marginally low, 0.02%, and Egypt was down 0.20%. The Nairobi stock market index closed in the red on Wednesday. And in the Middle East, Abu Dhabi's stock market fell at intraday, weighed down by its biggest lender amid global trade tensions and falling oil prices, which sent all major Gulf markets sliding. The Abu Dhabi index fell 1.39%, declining for the sixth straight session, with First Abu Dhabi Bank shedding 1.9% and Abu Dhabi Commercial Bank decreasing 2.3%. Saudi's index was down 0.72%. Qatar's index was down 0.95%, with heavyweight stocks, Qatar National Bank and Industries Qatar falling 2.7% and 1.1% each. In Dubai, the index lost 1.48%. All right, let's cross over to Europe, where stocks traded lower this morning as tensions between the U.S. and China ratchet up. There are also a couple of market news moving the market today. Well, let's talk to my colleague in Frankfurt, Conrad Busin. Hello, Conrad. Good afternoon. A beautiful day to you again. It's actually a rainy day today. I don't know the kind of weather you have there in Frankfurt.
Oh, it's such a rainy day here in Frankfurt. It just fits perfectly to that rather, subdued mood on the trading floor, Chimmy. Greetings from Frankfurt to everyone in Nigeria.
All enjoying the good weather. Now, Uber's IPO is expected for tomorrow, and ahead of it, thousands of drivers for Uber's ride-hailing service are protesting against labor conditions. Also, Uber's competitor, Lyft, saw its shares slump 11% after a disappointing earnings report. What are traders in Frankfurt saying? Is the Uber IPO going to be a success?
Success or not, that is really a very difficult thing to predict. If we take Lyft as an example, you mentioned the 11% slump yesterday. It's really not a good example. Lyft's shares, they surged on the very first trading day, and I think it's fair to say that since then, more or less, the path of this share price was downhill, including yesterday's slump of 11%. Lyft, the company, has now lost a bit more than a quarter of its value at the exchange since the IPO. And we shouldn't forget, this ride-sharing business, this ride-hailing business is really a difficult one. It's facing many, many obstacles in many parts of the world. Not only the drivers are complaining, there's a lot of regulation against this ride-sharing service. For example, here in Frankfurt and in all of the other major cities, a lot of restrictions for this business, so that it's not really competitive to the traditional taxi services. And of course, it's not profitable. Uber is making losses, roughly $10 billion. The company has a massive cash burn of nearly $2 billion. So that, without the IPO tomorrow, the company Uber would actually risk to run out of money. Now, while all this might sound rather pessimistic and negative, of course, this will be a huge IPO and a huge story tomorrow. The valuation of Uber is expected to be between $80 and $90 billion. And many investors, they will buy the shares simply for, FOMO, fear of missing out. They want to be part of that story. And the story that Uber tries to sell is, yes, we're making losses now, but we, Uber, are the future of mobility. That is what they are saying. Of course, what they also mean is autonomous driving. Uber is developing self-driving cars, hoping to one day offer self-driving ride-sharing services, ride services, and that brings me back to the protests of the drivers you mentioned at the beginning. Actually, Uber is working on getting rid of those drivers in the long run, and that's the story, one important story of Uber.
Well, aside from Uber's IPO and, of course, Lyft's earnings, a large amount of earnings reports had to be digested in Europe today, from steelmaker ArcelorMittal to Deutsche Telekom and the famous Hamburg port. Which reports have been sticking out there?
Well, I picked out a report from a non-European company to talk about. First, SoftBank, the Japanese telecoms firm and large tech investor. And I think it's worth mentioning SoftBank because it's also a big investor in Uber. SoftBank managed an increase in its operating profits of 81%, 81%, and that is mainly due to the very, very favorable tech investments that SoftBank has made with its Vision Fund, that fund that is also backed by Saudi Arabia and by the Saudi royal family. This is the vehicle that SoftBank uses to invest in Uber, and the valuations of all those investments has increased so much that basically the telecoms business that SoftBank runs also is not so important or negligible. Deutsche Telekom also, most of the earnings reports from the German DAX, pretty average, I have to say. ArcelorMittal, you mentioned the steelmaker, very negative reception of the earnings reports, which is talking about sinking steel prices. Shares are down 5%. And also, I picked out two German engineering firms who are also big in the arms manufacturing business. And I think it's worth mentioning them because their earnings reports are a bit contrarian. Jenoptik, that's a big company also in the arms manufacturing business. The shares are down 5%. Jenoptik has complained about the arms export restrictions that Germany has put on the sector, in particular about exports to Saudi Arabia. On the other hand, Rheinmetall, a company that produces tanks and also many things that you need for tanks, here the restrictions have been much less hard. The share price is up 2%.
Just before I let you go, Conrad, let's look at the data coming into the markets today. Well, we've seen stock markets again under pressure because of those import tariffs on Chinese goods. The United States is expected to increase. Now, but Chinese inflation data came in stronger than anticipated. Why is this not triggering a little bit of optimism? The fundamental economic data from China is simply less important at the moment. Investors are really focusing much more on the big picture and not on the nitty-gritty of economic data. And you mentioned the trade negotiations. They are planned to continue today in Washington between the US and between China. And people on the trading floors I talked to told me that they realize that more and more this is not just about import tariffs. This is the United States really playing the game of a superpower. Let's not forget, the US also has announced new sanctions against Iran. So a lot of questions, a lot more is at stake and put into question here. Not only imports and exports, the Belt and Road Initiative by the Chinese, the role of Huawei, this large 5G technology provider, this is all really drawn into question again. And that's why, inflation data like the consumer price inflation from China is simply getting into the background somewhat. All right, Conrad, one more day to end the trading week. In the meantime, enjoy the rest of today.